Welcome to the Deep Dive, where we take complex market inputs and distill the crucial intelligence you need.
Today, we are immersing ourselves in the Q3 fiscal year 2025 earnings call for Astera Labs. They're a company whose entire business, really, is built around solving the connectivity crisis inside these massive AI data centers being built globally.
Right. If you're following the AI build-out, you know that the single biggest bottleneck often isn't the GPU itself. It's getting data to the GPU and back again, at scale.
Exactly. And Astera Labs sits right at the heart of solving that problem.
So our mission today is to break down their impressive financial beats and maybe more importantly, the strategic roadmap for intelligent connectivity that really dominated this earnings discussion.
Yeah, this was a report that definitely demands attention. The company delivered, well, a clean sweep. Both the top and bottom lines significantly surpassed consensus expectations. It really paints a picture of accelerating platform adoption.
Okay, let's start with the headline numbers then, the ones that grab the market immediately.
Right, so revenue landed at $230.6 million. And that absolutely crushed expectations by roughly $24 million.
Okay, $24 million beat is significant.
It is, but the rate of change is the key figure here. That revenue represents a staggering 104% increase year over year.
Wow. A triple-digit growth rate at this scale.
Yeah.
But that really speaks volumes about the demand from hyperscalers, doesn't it?
It really does.
So how did that translate to the bottom line?
Well, the non-GAAP EPS came in strong, too, at $0.49. That sailed past the street consensus of 39-cent census. And this strong execution, you saw it translate into immediate bullish sentiment in after-hours trading, confirms the market believes the demand for their core products managing connectivity is both sustained and growing rapidly.
Okay, that brings us to profitability. We often see high-growth companies sacrificing margins, but the profitability metrics here seem, well, eye-opening.
They are, and this is maybe the strongest signal in the entire report. It's about their pricing power and just how essential their technology is. So non-GAAP gross margin was reported at 76.4%.
76.4%.
Yeah. To achieve that kind of gross margin in a hardware, silicon-heavy business is pretty incredible.
It really is.
And furthermore, the non-GAAP operating margin hit a new record level of 41.7%.
41% operating margin.
Right. That demonstrates serious operating leverage and, strong structural economics for the business model.
Yeah, a 76% gross margin suggests they're selling mission-critical complexity, not just commodities. So let's dig into where this performance came from. The growth wasn't just pulled by one product, was it?
That's right. It was broad-based strength. It touched three key pillars: Aries, which is their PCIe signal conditioning line.
Okay.
Then Taurus, the Ethernet smart cable modules, or SCMs.
Right.
And Scorpio, which are the crucial fabric switches.
Okay, let's focus on Aries for a moment. That speaks to the immediate challenge, right? High-speed data transfer.
Mm-hmm.
The sources mentioned their PCIe 6 solutions were a huge driver. For someone who understands chips, but maybe not connectivity specifics, what exactly is a retimer, and why is Astera's PCIe 6 solution so critical right now?
Yeah, good question. That's a necessary clarification. Think of a retimer like the Aries product as a booster station for a digital signal.
Okay.
When you send incredibly fast data across copper cables, like the PCIe lanes connecting GPUs, the signal naturally degrades. Distance, noise, speed, it all weakens it. A retimer intercepts that weakened signal, cleans it up, and retransmits a pristine, powerful signal down the line.
Got it. So it's not just a fancy repeater, it's an intelligent signal reconstruction device.
Exactly. And the transition from PCIe 5 to PCIe 6 dramatically increases the speed. That makes this whole signal integrity problem much, much worse.
Right. Higher speeds, bigger challenges.
Precisely. And management confirmed that their Aries PCIe 6 retimers are the industry's first and only solutions of this generation ramping in high volume right now. That silicon leadership is extremely valuable, already accounting for over 20% of Q3 revenues.
Okay, that market leadership is a major current advantage. But let's look ahead a bit to where the real revenue inflection point might lie. The Scorpio fabric switches. What's the status there?
Right, that's the future growth engine. We need to differentiate between the two main series here.
Okay.
There's the Scorpio P series. That's focused on simply scale-out applications. It's volume ramping successfully at their lead customer, and importantly, has secured new design wins at multiple hyperscalers.
Just momentum there.
Yeah. But the higher opportunity product is the Scorpio X series. This is the complex scale-up switch. It's designed to knit together these massive GPU clusters.
Really big iron.
Exactly. That X series is currently shipping in initial pre-production quantities. But the full volume ramp, that's the major catalyst everyone's watching for, anticipated throughout 2026. If they execute on that ramp, it really changes their content story dramatically.
Okay, let's transition then from the Q3 beats to the future roadmap. Because the company didn't just look backward. They gave some pretty significant strategic guidance for what they're calling AI infrastructure 2.0.
Yeah, they did. Starting with the immediate horizon, Q4 guidance was strong. Again, above consensus. They're projecting revenue between $245 million and $253 million.
Solid guide.
Very solid. However, they did forecast a slight gross margin moderation, dipping to around 75%.
Why the slight dip after such a banner quarter at 76.4%? That's something investors always watch closely.
Yeah, and management was transparent about it. It's primarily due to an increased mix of the Taurus smart cable modules, the SCMs, in the quarter.
The mix shift.
Right. The Taurus product, which includes physical hardware alongside the silicon, naturally has a lower margin profile than, say, the pure Aries silicon solutions. So this is really the market giving us a clear signal. As they move towards selling entire connectivity systems, the overall margin might stabilize slightly lower, but the total addressable market grows significantly.
That makes sense. And that pivot towards selling systems is perfectly encapsulated by the biggest strategic move they announced, right? The optical play.
Yes, absolutely. The definitive agreement to acquire aiXscale Photonics. This company specializes in fiber chip coupling technology. It's a major long-term statement. Their intention is clearly to extend their switching and signal processing expertise beyond copper into true optical scale-up solutions for future Scorpio switches.
Can we simplify that? Fiber chip coupling technology. What does that mean in practice, and why is this acquisition necessary for them?
Sure. Think of the analogy like high-precision plumbing, maybe. As data rates keep accelerating and the distance between components in a rack grows, copper just fiber. Well, it runs out of steam.
Right, physics limits.
Exactly. It can't carry the signal far enough without excessive power or signal decay. The shift to optical fiber is inevitable for longer distance communication within the rack. But the hardest part isn't the fiber itself. It's that tiny, hyper-efficient connection point where the electrical signal on the silicon chip has to flawlessly transition into a photon of light on the fiber.
The interface. That's where the complexity and probably the margin lies.
Precisely. So by acquiring aiXscale, Astera is essentially buying the expertise to own that complex interface. They are positioning themselves to intercept that inevitable technological inflection point where copper gets phased out for the longest scale-up domains.
Okay, that makes strategic sense.
Yeah.
But the timeline they gave for this optical revenue impact, 2028 or 2029, that feels like a lifetime away in the AI sector. Are they taking a risk, investing significant capital now for something that far out?
It's definitely a calculated risk, but it's about securing their long-term relevance, right? They know their current copper expertise has an expiration date, at least for that high-end scale-up domain. The timeline just reflects the reality of long qualification cycles required by hyperscalers for fundamentally new foundational technologies like this.
Okay.
So they aren't going to see material revenue for maybe 4 years, but by making this move today, they basically guarantee they'll have a competitive optical solution ready when the market demands it later this decade.
Right, playing the long game. Okay, shifting gears back to the more immediate next-gen standards. What about UA-Link? That's a standard gaining rapid momentum, backed by some major industry players.
Yep, they addressed UA-Link directly. And interestingly, they view it as a meaningfully additive opportunity, not a replacement for their existing PCIe and CXL scale-up business.
Additive, okay.
Yeah. They said they're already heavily engaged in the request for proposal, RFP, and request for, quote, RFQ stages with multiple leading hyperscalers regarding UA-Link solutions.
So they see UA-Link as like another arrow in their quiver for connectivity rather than a threat to their current business.
That seems to be the strategic stance, yes. They expect UA-Link solutions to be available in the second half of 2026, but meaningful revenue realization is probably slated more for 2027. The core message here really is one of aggressive standardization. Astera is backing every major open standard, PCIe, CXL, Ethernet, and now UA-Link.
The Swiss Army knife approach.
Exactly. They need to be that Swiss Army knife of connectivity that works with whatever architecture the hyperscalers choose. That flexibility is absolutely mandatory if you want to win long-term business in these emerging multi-vendor AI supply chains.
Okay, let's pull all these threads together then. Winning all these battles, PCIe 6 now, the Scorpio switch ramp, the optical pivot long-term, UA link readiness.
Yeah.
What does this all mean for the company's long-term financial profile? It feels like it all boils down to increasing their dollar content per accelerator, right?
Exactly. This is the so what of the entire call, really. The central strategy hinges on the Scorpio X series becoming the critical anchor socket within these next generation AI racks.
Help us define that anchor socket concept in simple terms.
Okay, think of it as the central nervous system of the AI rack. If
Yeah.
they win the fabric switch position, meaning the Scorpio X series switch becomes the primary high-speed connector for the GPU cluster, they immediately become indispensable. Winning that primary switch position naturally pulls through demand for all their ancillary products. Suddenly you're selling the Aries retimers and the Taurus cable modules because you won the switch.
So instead of selling just a handful of components, they sell the entire platform of connectivity for that rack.
That's the goal.
And what's the potential financial impact of winning that platform? Did they quantify the kind of content gains they expect if they secure this anchor socket?
They did give some color on that during the call. They suggested that winning a full rack design could scale up to multiple thousands of dollars of Astera content at the accelerator and rack level.
Wow, multiple thousands per rack.
Yeah. And given the massive scale of AI data centers being deployed, that content gain is the true driver behind their valuation and those future revenue projections.
Okay, but this success story still relies heavily on the continued massive spending of the largest tech giants, the hyperscalers. Is the customer base diversifying at all, or are they still heavily concentrated? That concentration risk feels like the key risk for the whole sector.
That's fair, and they address those concentration concerns directly. Management stated they are engaged with over 10 different AI platform providers on just the PCIe scale-up solutions alone.
Over 10, okay.
Yeah, and importantly, this includes platforms using custom AI accelerators, not just merchant GPUs like NVIDIA's GB300 and B300.
So broadening the base beyond just the biggest GPU provider's ecosystem.
Right. That diversification, plus what they described as sustained demand from Chinese hyperscalers using PCIe-based solutions, that gives management, they claim, revenue visibility well into 2029. That level of multi-platform engagement really does reduce the risk of being overly dependent on a single company's design choices or roadmap.
Okay, that provides a potentially long runway for growth, assuming, execution remains flawless. Which brings us to our final segment. Time to transition our detailed analysis into a bold yet plausible trade idea. And as always, this is purely for intellectual discussion. It is explicitly not financial advice.
Okay, so our core thesis here is really driven by that strategic acquisition announcement we discussed. The company is actively signaling what they see as the inevitable technological inflection point.
Which is?
The end of copper dominance for long-reach AI scale-up networking, at least in that 2028-2029 timeframe.
Okay, makes sense. So let's hear the trade that captures that multi-year shift.
All right, the trade. Long Astera Labs, ALA, based on their current execution and, frankly, their strategic foresight. And short, a basket of companies that are heavily reliant solely on long-reach copper interconnects, particularly those without a clear, qualified optical roadmap.
Okay, pitch the rationale for the short side of that trade. Why short the pure copper plays?
Well, look, Astera is establishing leadership now in copper with PCIe 6, but they are proactively investing spending capital to leapfrog into the optical world via that aiXscale acquisition. By securing the anchor socket with Scorpio now and simultaneously overlaying a Photonics roadmap, they position themselves to capture the presumably higher average selling price, the ASP, of the necessary optical hardware when rack scale reaches eventually exceed copper's physical limits.
Right.
The short thesis just reflects the risk faced by legacy copper players. They risk being technologically left behind when the rack architecture is forced to disaggregate and demands these high ASP complex optical solutions. It's really maybe a 5-year technology shift thesis, betting on Astera embracing complexity, higher margins, and offering that flexible content story.
Okay, that was a really focused look at Astera Labs' Q3 print. We saw record margins, massive beats, and a clear strategic roadmap centered on owning the rack scale connectivity story, whether that's copper today, UA link tomorrow, or eventually native optical solutions.
Yeah, and the key takeaway for you, the listener, Success really hinges on execution from here. Monitor the pace of that Scorpio X series volume ramp throughout 2026. That will be the clearest near-term indicator of whether they successfully capture that essential anchor socket and start realizing those dramatic dollar content gains they're projecting.
Right, now for the provocative thought to send you off with. Industry consensus suggests hyperscaler AI capex might surpass $500 billion, $500 billion, across just the top 4 U.S. players in 2026.
Huge numbers.
Huge. So, given the massive industry push toward open standards like UA-Link and CXL, which company, thinking purely from a networking and connectivity perspective, is best positioned to monetize the inevitable multi-vendor supply chain that follows that kind of spend?
Something to think about. Keep diving into the data, and we definitely encourage you to explore the long-term implications of copper versus photonics. It's a critical shift.
Thanks for diving deep with us. We'll catch you on the next deep dive.